It's actually quite a wonderful panel. Each of these folks have been, have really developed something innovative and disruptive, and have played roles in kind of disruptive thinking in the payment space. I think what I'd like to do is maybe in some way you can get a good understanding of what they've been doing through this question which I'm going to ask them, which is what has been the kind of impact of technology, right, and this is more addressed to kind of Rishi, Manish, and Vasu, impact of technology on the businesses that you have built. What has been the disruptive component, and maybe you can give a kind of a few lines of maybe explain what exactly your companies do, and then kind of talk about technology and why that's been disruptive in your businesses. Can we start with Vasu?
So the brief introduction, BillDesk is a payments technology company. We are a 13-year-old company, and at the time when we started business, banks had just started investing into their core banking technology. Our entire business is based on leveraging technology. As a core service, just to give you an idea of BillDesk of what we do, we essentially enable businesses to receive monies from their customers electronically and remit monies to whoever they want to, whether it's agents, vendors, employees, electronically. So we are a platform that works with two kinds of entities, financial institutions on one side and any entity that wants to receive or make payments. We are a neutral payments platform, which is to say that we don't do any other business other than just enabling payments. And that's pretty critical in a payments business because there's a lot of information that flows through a payments platform. The core thing that we did when we started, which kind of distinguishes us from any other player in a worldwide sense, is we started the service to enable people to use their banking accounts online to make payments. Cut to a context of year 2000, worldwide the only way you could make payments was by using a Visa or a MasterCard at that point, broadly. The core thing that we leverage, which is a function of the way banks' technologies also work, that we enable what we call as the direct debit to banks. And to date, that is an extremely core aspect of the business that we do. And it's only in the last 4 or 5 years that worldwide that started emerging as a similar technology to enable. So that's been I would say, the core technology angle into our business.
I represent a company called Fino Paytech. We are known as Fino more than the Fino Paytech per se. We started about 7 years back, and the reason for starting Fino was to look at disruptive technologies in terms of what can actually happen in the banking in the next 5-7 years. We all know that we have been doing banking through a normal branch model system, but there are about 750 million people in the country who are unserved or underserved. So that set the entire system thinking in terms of the regulator, the ministry, in terms of how do you bring inclusive growth. Unless and until the banking sector is available to everybody in the country, how can the growth happen? And we thought of how can technology actually help us in reaching out to all the 750 million people in some 6 lakh odd villages all across the country, where you can't set up a branch, because any technology for bank is very important from a cost of transaction per se. So we had to reduce the cost, we had to reach, the model had to be scalable, it had to be secure because we were dealing with banking transactions, we were dealing with people on the ground. So that led to us thinking in terms of how do we do. So that led to the formation of Fino, and we started doing through a mobile POS kind of an architecture in which we started issuing smart cards, where the demographic of a customer was stored on the smart card, the fingerprint was stored on the smart card, and that's enabled the entire transaction. So that is 7 years back. Now if I look back, we are there in about 400 plus districts and about 50,000 plus villages. We have some 65 million customers all across the country. We do about 7 to 8 million transactions a month, roughly about $200 million flow through our system every month-to-month basis. We are about 30,000 agents points we have across the country. So the model is scaled. So the reason why the model is scaled is predominantly, I would say, a lot of it goes to the technology innovation which happened. And when we looked at technology, we looked at technology was stable, which could be scaled to a level where so much transactions can actually flow. We could reach to the last mile. So we started with an offline technology at that point of time because connectivity was not available. Now that the connectivity has become more ubiquitous, it's available, data connectivity is also improving now. So now we are looking at online, which is there, as well as the offline, which has been there with us. So as a technology company, the entire technology being available to us at our, in a way, the innovation which we did with it enabled us to reach 65 million customers in a matter of 7 years. We had about 2 million, 2.5 million customers a month. That's the rate at which we are growing.
Hi, I'm Manish Patel. I am the founder and CEO of MSwipe Technologies. We're essentially a 3-year-old company that started with the idea of why such a huge disparity in India in terms of the number of merchants that actually acquire card transactions versus the number of cardholders in the country. I mean, it's about 340, 350 million cardholders and only about 500,000 points of acceptance in the country. Without technology, our business just wouldn't take off. Essentially, we've been able to leverage 2 or 3 important technological milestones in terms of infrastructure. So one is, of course, wireless communication. Today with the advent of widespread mobile connectivity across the country in terms of data, the last mile data connectivity that is essentially required to power all these kind of transactions is available. Second one, of course, is mobile phones. As the computing power of mobile phones has increased, and these are more and more prevalent in the hands of small merchants. It has allowed MSwipe to essentially use both of these infrastructures that's available to bring to market a device that can actually plug into any mobile phone, use a regular 2G network to connect to payment systems and actually carry out a card transaction. Essentially this has helped us start up about a year ago. We are currently 8,000 terminals installed in the past year that we started operations. We're present in 345 cities. Essentially the wide reach of mobile POS has sort of lived up to its premise. We processed about 110 crores worth of transactions in the past year that we've been live with the platform. And essentially we've also been able to use this technology to bring in a lot of automation for businesses that are large enterprise businesses but need mobility to quickly perform business functions. For example, one of the largest segments that we've been able to bring to market is the insurance segment, where we have a lot of a lot of agents who actually collect insurance payments. Till now, it's always just been cash or check. We've enabled many insurance companies now to accept card payments immediately at the premises or the location where they meet prospective customers. So it's mobile POS as it's now being formally called just wouldn't be possible without some of these technologies that have helped us bring this to market.
In the next question, since we are kind of between you and the cocktails, we're going to try and spice it up a bit. And I don't know if you guys remember this Coffee with Karan, where they have a rapid fire round, right? And as someone on the panel said, we don't have Kareena, but we'll try and make up for that. But what we want to do is, there are a lot of these buzzwords in the payments industry, right? And whether it's NFC or it's assisted payments or it's domestic remittance or it's UID. So what I'm going to try and do is pick on any 2 guys, and that's going to be my choice. And basically, I'm going to ask them whether it's hot or not, right? And they can't be like maybe. And if they're maybe, I want the audience to boo them. And they have to decide whether it's hot or not. And then they have to give a 1-line answer, probably, maybe 2 lines, but not 3 lines, on why. Okay, and that, I mean, in some ways it's a nice way of covering concepts, technologies, otherwise it'll become a nice theoretical discussion. So just a good way to, and then if anyone has any follow-on questions, we'll take it in the question section, okay? So I'm going to start with white label ATMs, okay? And there I'm going to pick on first Rishi and then Praveen, so.
Hot from my side.
Okay.
And the reason is that we have seen the ATM penetration which is there. We have also saw the recent data which the government published in terms of the number of transactions going up on the ATM. This necessarily means the case that there is a possibility that in tier 2 and above cities, we have in urban and metros, we have a lot of ATMs which are there and the transaction flow is happening. But in other cities, transactions flows are pretty, it's going up and ATM penetration is not very good. And I think the most important reason why
That's more than two
ATM,
lines, buddy. So you got to, you have
in terms of the
15
cost of transaction per se.
Yeah. Okay.
So in terms of the cost of transaction, the ATM will definitely bring down the cost and that will be good services from a consumer point of view.
Okay, good. And
No, it's not. ATM, as the traditional definition is so 80s.
okay, that's one line. Okay, that may have been too short, but anyway, I'll let you go with that. So let's go to the next one. Let's talk about UID. Praveen, given your background, I'm going to pick on you.
Heart.
And Vasu. Okay, so Praveen.
Heart, my view, the single biggest game changer that can reduce transaction costs. Technology in financial services means how do you do micro transactions at a economically viable pricing model, and UID is the single biggest enabler of that.
Okay.
With any government initiative, it's difficult to take a position yes or no, but from a payments business perspective, short term, not hot. Identity business, hot definitely, but payments business in the short run, not hot.
Why not?
It has to, it is created for the first priority it has is to create the identity thing going for the people. I think it's taking on too much to try and do both creating the UID as a platform at one point and link it to payments. Gets into the banking business a little too much. Too many conflicts at this stage. Needs to get priorities of, get the first story right before it moves to the second. Long term, definite yes, but short term I think first needs to get
So you
the,
just think there'll be execution challenges in getting all of this linked up and...
that's the way India is, for everything is an execution challenge. Here I think it's about wanting to do too many things at the same time, and market rarely allows that, and the focus keeps shifting. You do one thing well.
Contrast is coming in.
No, I was going to invite you in. I was going to invite you in.
0 to 400 million UID is issued in 3 years or 4 years. I don't know of any other project in the world that has gone on so fast. So execution
You
challenge is
have
a cliche.
bias, right? Can you communicate why you have a conflict?
No, I had, because I was part of the initial team. I spent a year there, no longer. I was not involved in any of those 400 million UIDs that got issued because we were the initial. But no, the numbers are there. That's all I'm saying. It's 400 million people today in the country have a UID. So, and that's happened in 4 years.
So back at
It's a great for identity business. As I said, from linkage to payments, I can see the government benefits working. It's a distinction between payments and remittance. Is there an opportunity just from a business or from anybody doing that? I see in the short term a very limited prospect. But with any government initiative, you can mandate something. If tomorrow you were to say UID is the only way employees will get salaries, if you have a UID linkage, it's automatically going to succeed. I'm saying, shorn of all those kind of regulatory impositions, standalone, it's a better identity product than a payments in the short run. Payments will come only mandated.
No.
I would like to add another dimension to it.
First time, huh? Last time. Okay, go for it.
Okay, so we do about 1 million enrollments on UID every month.
in the mic.
But that's not what I'm going to in terms of emphasize. But what is more is that as a company, we are majorly into government transfer payments, payments which we have to go at the last mile. We have seen the level of acceptance which is there at the ground because of the amount of flow which actually goes out of the system is very high. With the initiative like UID and Aadhaar or through NPCI, whichever way we want to name it, is we see that there will be a directive mandate from the government where the state governments will have no choice but to adopt this unique system, and this in turn from the country perspective will reduce about they say about 40-50% of the money which doesn't go actually to the beneficiary will come down, fiscal deficit will improve. So all these things if we look at from that perspective, yes, maybe they are taking up too many things on them currently, but they are also trying to make a business case out of the entire thing so that people start using Aadhaar platform.
Okay. Okay, moving on. Next one is going to be assisted payments, and let me clarify here, there are a lot of companies right now in the payment space which effectively are not betting on self-serve models, right? That you will do it for yourself. You can go to a Kirana store or someone can come to your house, and you know, India is a kind of country of assisted payments where people kind of make you, I mean, we have one in our portfolio called Suvidha, which has like 50,000 outlets, and you know, obviously the bet is that people will go to these Kirana stores and then pay their bills or then do domestic remittance. So my question to and Manish, I think, okay, no, sorry, I'm going to pick Rishi because you have Fino and that's an assisted payments model. So if you take Rishi and, maybe pick on Vasu again. So Rishi, what do you think?
So this is what we do every day, so it has to be definitely hot. We have seen...
No, it doesn't have to be hot because you
No, that's why we are in this business, because if it's not hot, I would be in that business. So we have seen, and we looked at the model, we also tried the self-service model. It all depends upon the pyramid, in terms of where are you looking at the pyramid. If you're looking at high up in the pyramid, yes, definitely self-service is the right way to do, because people can manage, they have literates and all those things are there. But the moment you go down the pyramid, look at the APL segment, look at the BPL segment, there you need assistance, and there you need somebody, and a self-assisted or a self-serve model is obviously a much more capital-intensive model, where you set up a machine which is what 1.5, 2 lakh rupees, where in case of assistant model you can work with what 10,000, 15,000 rupees. So it brings down the costs per se. But purely from a customer experience point of view, and that we are into that business, we have some 25,000-30,000 points all across the country. So this is definitely hot, and if we are able to move up the literacy rate and people are able to do it services on their own, and somebody can fund the capital cost, yes, we can move towards self-service. But currently, yeah, there is
Vasu, yours is a lot more self-serve, right? The bill desk model. So what is your view?
It's a large topic, but assisted payments, market segment specific, hot for some, not for others. Just clarifying one bit. To my mind, bottom of the pyramid, extremely relevant, useful. People don't know how to transact. It's a great way to move them up the curve. At the top of the pyramid, and by that sense, I'm societally defining it, great model. If I can go next door, make a payment, it will work. Challenge, however, from just a business perspective in this, it's commercially the way this country works. This is not a model that you can build a great business unless you can move to charging the consumer for this. And that is not a model which the regulator or the government likes per se, or consumers in general. Therefore, business case for somebody to build a great business in this, slightly tough, needs a lot of capital, lots of time, lots of business. Makes sense, just to give example of a marketplace. So if you have a telco which is building a telco wallet which is also an assisted sales, makes sense because you're riding on your distribution network, it has collateral benefits. Standalone business case for somebody to build, tough. RBI has also a view on this in terms of creating 1 million+ outlets which will do this for various kinds of payments. So again, as I said, a space where a regulator, quasi-regulator, regulatory-based initiative takes place will succeed. It's just a question of what time frame you want to define. In the long run, everything can succeed. Nobody's there going to be able to judge it. In the 3-year time frame, from a business case perspective, no.
Okay, good. We're getting different views. Let's talk about, let's say, NFC. Okay. So maybe Manish, you've been quiet. So NFC, what do you think?
Hot, very hot. NFC, I think, is definitely the next best standard, or the next standard that is really going to replace plastic the way we know it. It's been around for about 30-40 years in people's wallets, and today I would believe...
Let me stop you for a second. Is everyone familiar with NFC here? Anyone not familiar? I don't want to embarrass. Okay, so can you just describe NFC for 1 second? I mean, one quick minute.
NFC essentially is near field communications. It allows data to be stored securely in a chip, and then that can be transferred wirelessly to any other reader that you'd want to read that data from. So essentially,
within a certain
within very close proximity. Okay, so it's not. I mean, it has to be. It's essentially the NFC chip has to be tapped onto the reader, and with that the reader is able to actually pick up the data that's on the NFC chipset. It's wireless. I mean, it's cool, of course, but I think NFC can be put in places where currently traditional cards can't be put in. For example, mobile phones, etc. These cards can then be topped up wirelessly. Okay, so you can do it remotely, which makes it very easy to load a card, deactivate a card, do whatever you'd want to do with it in terms of the data that you store on it, and just the sheer convenience of having to be able to put multiple cards or multiple readable data instruments on something like a mobile phone, which is now, I mean, part of everyone's lives, I think makes a lot of sense.
So I mean, one of the applications I kind of saw was that you didn't need to actually tap it. You can walk into a shop that has an NFC terminal and it can actually read your card, and you don't have to actually, I mean, is that...
I think falls more in the space of RFID,
okay.
not
so you do need to tap it? I mean, there's some way that you
it has to be very close proximity, especially when it comes to payments, it has to.
Okay.
So NFC for me is something of the future. It is not something which is there currently. We have seen there are telcos, not telcos, but predominantly companies like Google and other mobile companies were trying to push NFC, but the cost is still high. So for NFC to become reality, it could be a good innovation, it could be something which is there, but for it to penetrate an adoption, maybe 5 to 10 years from now, when all mobile phones will have NFC chip in it and the reader will be there in all the machines, it will definitely bring down the cost. But the cost of the NFC, which is about $20 currently, tell me if I'm wrong, but it was about $20, which I last remember, is still high. So the mobile phones, smartphones have come to 6,000, 7,000 rupees, about $100. So NFC cost per se to the total mobile cost is very high. It's a good technology, but adoption on a large scale, to become more relevant is something which will have to take another 5-10 years.
Since you made the mistake of calling out my name, I will go ahead anyway. Okay. I agree with Rishi, I think, and both in Manish in one sense. Great business, but minimum 10 years out. Cost is not, to my mind, the inhibitor. Consumer behavior and adoption will be the challenge here. There is a huge, significant first mover disadvantage. Whoever puts in capital first is going to burn money in this. This is a country like India, you have trouble creating gated systems for exiting out of a metro network. NFC is a huge consumer behavior challenge. It's not a technology challenge at all. Technology exists, can be implemented, can be executed. It's consumer behavior.
Okay, Praveen, I'm going to give you a shot now. RuPay. Everyone familiar with RuPay? Need a couple of lines on it or no? Okay.
RuPay is essentially India's response to Visa and Master's monopoly behavior. Set up by an organization called NPCI, National Payments Corporation of India. The idea is not entirely unique or proprietary in India. The idea was basically copied from China UnionPay in China. And the idea and the concept is that this RuPay is similar to a Visa or a Master. Today, if you have a Visa card or a MasterCard, why not a RuPay card? The only difference is the transaction costs are significantly lower. It's probably half or one-fifth.
Fraction.
Yeah, one-fifth the cost of what a Visa or a Master would charge, which is why I said it's a direct play on monopolistic pricing globally. And China has done this extremely successfully, so India is trying to do it. It's another area where people were very skeptical when I still recall when NPCI was formed. Again, all the cliched definitions of government projects and the associated baggage with it were applied to it, but I think...
so he looked at you.
No, most entrepreneurs do that, but anyway. But I think this is another case where there has been significant milestones achieved in execution, and the RuPay card is now out. I don't recall, Rishi, in how many places have been, or how many cards have been out, or how many.
I really don't follow those numbers, but there seems to be going out more often now.
So surely it's hard in the sense it does what we need to do to reduce transaction costs. And I keep coming back to this. Innovation in financial services or payments is about transaction costs. And what can you do to bring down transaction costs? And definitely RuPay contributes a lot to that.
Okay, so I'm just going to give you my 2 cents over here that, the only thing is that while RuPay has been launched, etc., we aren't yet, I think the point which Vasu made earlier, that consumer adoption, we haven't yet seen that in a big way. I mean, everyone I know, I don't think we see RuPay cards out as yet, and, it's been going on for a while. So the question which I would have is that what is the time horizon, especially if we're looking at it from an investment thesis standpoint? Is this going to have the level of, it normally takes, there is a cycle, at some point there will be a tipping point, but there will be a cycle of adoption, and again, is this going to be a big trend for the payments industry in the next 18 months, or is it going to be kind of beyond the 3-4 year horizon? That would be my 2 cents. I'm going to move on in the interest of time. MPOS, so, Manish, I think we know your answer, but we'd still like to hear it, since your company is a play on MPOS, but why don't we start there?
MPOS, of course, very, very hot.
No, so why don't you explain it again, just for, you just do a one-line explanation.
Mobile POS essentially allows you to convert your mobile phone into a card acceptance device. Right?
So you can swipe your card over.
So this, no, I'm unfortunately not carrying one, but it's a small little device that plugs into the audio jack of your mobile phone. There's software on the phone that allows you to actually then use it as a conventional POS device. You can swipe your card or your customer's card and actually accept payments on your mobile phone. Essentially, this, India is all about small merchants. Mobile POS enables every single, or theoretically can allow every single small merchant in this country to start accepting electronic payments, essentially card payments. It allows them to do it not just on their device, but also anywhere. So it's not essentially tethered to a landline like conventional POS terminals. It also significantly reduces cost, which is one of the biggest drivers of anything that you'd want to do at this scale, because conventional POS terminals are 3 to 5x the cost of the entire mobile POS, including the cost of the phone. It's also significantly lower to maintain, in terms of cost, to maintain, manage, and very intuitive for people to use, because just like an application that you use on a mobile phone every day, it's just another kind of application.
Okay, and if I can pick on Vasu?
Yes, hot. I would agree with the concept of mobile POS being hot, because that's inevitably the way it will go through. What are the angles to it which are not hot in an Indian context? I think globally very hot. India, I think the big challenge is going to come from the fact that there is a regulatory cap on pricing that you can do to the end merchant, and that can prove to be a dampener, which essentially means a huge scale needed before you kind of can call the business a success. Second, there will be a continued need to evolve and invest in technology. If you're going to bet on UID and biometric as a way to keep coming in, swipe as a technology will be parallel to the biometrics. Somewhere you're going to place your bets on what is the technology you'll support. So if you're going to say Wave and Pay as the NFC technology coming in, UID biometric coming in, swipe as a way, all will coexist. So you take your pick and you'll have to do, you could do all three. First movers will always have an advantage. I can see Manish ready the response. But yes, as I said, inevitably the way forward in a 5-10 year zone. Indian challenge will be pricing.
So I just want to clarify a couple of things. Of course, mobile POS cannot just do swipe; it can do chip card, can do NFC payments. So it's not just swipe; it can do everything that a conventional POS terminal can do. Specifically in the Indian context, I agree with Vasu. Monetizing is important, and I personally feel, and of course our experience over the past year validates that small merchants essentially will pay for this service. Today we have merchants, every single merchant on our network today has essentially purchased a POS terminal from us, which is dramatically different from what's happening in the industry today. Bankers have been doling out these terminals for free to merchants. So I think that there is a use case merchants will pay, because no merchant wants to turn down a customer. Right? They will accept forms. If it is a mechanism by which a customer wants to pay, they will they will definitely use the tools that enable them to do it.
Just to add to that, I agree with that, except that I said there's a cap on regulator how much you can charge.
The cap is on the MDR. We do not
So-
participate in the MDR.
So therefore, from a technology perspective and a software perspective, device perspective, great.
In fact, the
As a
regulatory cap
payments-
helps us because it brings down cost for merchants.
So therefore, distinguish it as a software and technology play, great. As a payments play, then the answer is no. I mean, if you're going to distinguish between the two, because on payments play, as he himself said, in the traditional POS, banks already dole it out free. If viewed as a payments play, banks will go on to dole this out free too. In fact, they have a lesser of a cost to dole this out free than the traditional device.
But what we do essentially is charge merchant for ongoing services for providing the platform for them to do the transactions.
Which is what I said, if you therefore segregate this
You're
technology
I
versus
think what he's saying is you're a technology play and therefore you're cool. But if you're assuming the banks do this, that as it becomes larger, you could argue that all banks will, scrap the POS terminals and start doling out these for free. Now in your case it might help you, but in terms of, as a terminal, again the same, same competitive pressures come in. Praveen, you wanted to say something?
No, I was just curious, how many of you have got this new chip and PIN card where you have to enter your PIN on your car? So, and how many of you that got it had this experience of sitting in a restaurant and you're paying by card and you give the card and the guy says, can you please come to the cash desk and type your PIN? So,
Starting to happen.
that's it. So that's the market.
The guy got the POS to me and got it done. All others either wanted me to, go there or some variant of that which I was not willing to. So I just changed the card.
Sorry, so
Don't give it to him, yeah. don't
essentially
give it.
mobile POS is going to be, will enable you to do this. Completely change how POS acceptance works.
Okay guys, moving on, domestic remittance. So Rishi, since you do that business.
We do this business, we do about 2.5, 3.
Two lines. We are running out of time.
2.5, 3 lines. Now looking at the long answers, we have to be a little patient on this.
Okay.
So we do about 2.5, 3 lakh transactions a month, roughly about 100 to 150 crore rupees we transact on domestic remittance per se. See, what trend we have seen in this business is in the last 3 years, 4 years, a lot of banks are actually moving the customers out of their own branches, and a lot of our organized people are also moving towards organized channel. The entire push of RBI on the ALM side is actually pushing people to become open bank accounts and start transacting money. The cost of transaction in a domestic remittance is about 1 or 2% compared to 4 or 5% in case somewhere if it is unorganized, it could be in the region of 10%. So there's a big shift. The market has already moved. There are roughly about 25-30,000 crore rupees which moves on an organized sector. 30,000 moves more on an organized sector. So the unorganized 25-30, out of that 10,000 has already moved towards the banking system. So there is a big push which is happening all across the urban to the rural corridor, intercity corridors, intrastate corridors. So this definitely is hot.
And any of the panelists think it's not hot? Okay, let me tell you, again, we have a company which does similar stuff. I think one of the bigger challenges is going to be what is the size of the market here, because again, the size of the market will increase over time, but currently there is a lot of consumer kind of training, adoption. People have to understand that you don't have to use your historic channels, but you can walk into a Fino outlet or a Suvidha outlet and actually remit it. So I think one of the things is there's going to be a lot of cost to educate the laborers and some of the other guys who are using it, and there's also going to be a lot of I would say that we have to come up as a country with new technologies where we don't need to end up in a banking a bank account.
So on this, it's already moved to mobile and OTP technology, so it's very secure. Unless an OTP is generated and given to the customer on the other side, he punches his OTP. Once the OTP is done, only then the transaction goes. So he's actually, and by the time it's online. So he's there, in 1 minute he calls up his home and the money is already there in the bank account. So it really works very well.
Okay. Great. Okay. So that's the end of our hot or not section. Hope you liked that little change from the previous panels. But we're going to go to something more traditional now. And so want to ask our guys, our panelists, that what are the key opportunities in this payment space, right? I mean, compared to all the other panels you heard earlier, they are much more traditional, banking, NBFCs, financial service, housing, even financial inclusion's been around for a while. Payments is definitely like the new area, and India has not really had a ton of disruption. I mean, I used to head eBay strategy group in the US, and obviously worked very closely with PayPal. And the way PayPal has kind of did wonders in the US in terms of opening up the $1 trillion payments industry, India still seems, I mean, obviously these guys are trailblazers in all that they've done, but still seems like a pretty kind of nascent market. So I'd like to know that from an investor standpoint, an investment standpoint, what do you guys think? And maybe focus on 1 or 2 points each, but what do you guys think about the key opportunities? And then later I'm going to come to the key challenges, and then open it up for questions. So let's just start with Vasu and come down.
I think when we look at opportunities, I think the first need is to define what is the payment space. Globally itself, understanding that payments by itself is an industry or a vertical, that itself as a thought or as a notion is very recent. It's only in the last 5-6 years that markets have recognized payments to be an independent vertical, which in terms of size is larger than most traditional businesses. So you take mortgage, you take airlines. Payments as a business is much larger than all of these. It is still finding its space in terms of defining the contours. So the way I would look at it is, today there is, every economic activity finally fructifies only with the payment. So to that extent, everybody is in the payments business. But if you segregate that as parts of it which relate to putting out infrastructure, part of it which is product technology, part of there's an angle which is about service delivery to a consumer, this part which is a back-end service delivery. In these 4 quadrants, to my mind, there's an opportunity in everything. It's a very different kind of play in each. Very briefly, and going back to some of the topics we discovered earlier, in the infrastructure play, I think white labeled ATMs or even MPOS, when we look at it as an infrastructure play, I think there's an opportunity. India is underserved in these categories, and anybody who has the long-term perspective and the capital and the appetite for low return, akin to an infrastructure play, right? Not like a payments play. There is great opportunity there. The trouble, I think, is across all these 3-4 segments, at least from what I've seen over the last 10 years, from the ecosystem's perspective, and that is essentially the investor ecosystem and the banking financial institution ecosystem. The consumer is, of course, indifferent to all this. Consumer just looks at a convenient way to pay and what works for him or her. But from the investor and the financial institution ecosystem, I think there's a little time still before there is distinction made between these plays, because till that distinction is made, an appropriate commercial model relevant to building businesses there cannot evolve. And take an Indian context, there'll be very few payment businesses that can put up a hand and say they make good money, or they make any money at all. And that comes largely because India is a tough market. Everybody knows that. Take any business segment, India would be a tough market. It is tougher in the payment space for a couple of reasons. One, it is a regulated space. Most people don't understand it. Most people, and it takes a little while to discover where all you can get regulated. The other angle is building a payment business is almost like into building a banking kind of a business. It's not like building an e-commerce business, which is the other mistake I've seen most people make, when startups make at least, or new businesses make. And therefore sizing opportunity and figuring out how long it will take to deliver on that is a challenge. Having said that, if somebody gets that right, opportunity in each of these segments. In some of the topics that we covered earlier, one of the key things to note about Indian market is the Indian regulator, RBI, is extremely evolved in its thinking compared worldwide to most regulators. The other advantage somebody like RBI has had is the fact that we don't have too much of legacy to deal with, unlike other markets, right? In a banking or financial sense, we've just moved from being branch-based banking straight to cutting-edge internet banking kind of solutions. So RBI has already laid out the terrain well. The other distinction factor from an RBI perspective, Indian market perspective, lots of things which are left to private enterprise in other markets, RBI has taken the initiative to put out products. So if you take RTGS, NEFT, which most other markets don't have this. In India, you have it if you're a large corporate, you get RTGS transaction free. By pure value, over 70% of all payments in India already happen electronically. By volume, it might be low. But RBI has laid out the backbone and offered it almost virtually free to the entire segment. So you look at NPCI, which has created a mobile-based transfer mechanism for virtually again no cost that is available to consumers. So opportunities lie in how best you can leverage what the framework that the regulator is laying down, investment banks are making. Trying to build ground up on something may not necessarily yield best value here, but tremendous scope given the size of Indian market.
Okay, so I think the good thing is you also kind of covered with the opportunity, the challenges. So let's use that, and maybe Rishi, you can kind of talk about one big opportunity you see and one big challenge.
See, I think Vasu pretty much covered it, and I don't have a very different views. In fact, the only thing is I've seen that in US, a lot of work has been done on payments and a lot of things have happened. Luckily, in our case, the way I look at regulator is pretty open to it, and I've also seen in the last few years, though there has been some interventions of RBI trying to do everything on their own, there should be more like a regulator, but they start up their own companies like NPCI, and virtually they kill the entire competition per se, because at such low prices, there won't be anybody else who can price at that levels. But there are other things which are coming up, and one thing which is very critical where the differentiator is that the regulator is trying to move this payment business out of the banking per se. They are not trying to confuse that payments and banking is same. So like white label ATMs, then there are other initiatives on the POS. They came up with a tender where private players could participate. So those things will open up the market as such. So from a regulatory and from an opportunity perspective, I think it's a huge opportunity which is there. We are clearly in the nascent stages of those opportunities, but definitely doing business in payments in India is far more difficult than in US and in other countries. So we have to be a little more patient. The investors have to be a little more patient because it takes time to return. A lot of investment and capital would definitely need to go into this.
And that you're saying the patience is the key challenge in the sector.
Patience and investment is critical. Yeah.
Okay. Manish?
So essentially, the way I look at it is a huge opportunity. I mean, there's a $1 trillion economy, 97% transacted in cash in terms of payments. So I don't need to say anything more. I mean, there is a huge opportunity. Over the past 30, 40 years, there have been lots of innovation which is pushed out. Traditional way of doing things, whether it's music that's gone from analog to digital, whether it's the entertainment business that has essentially gone from analog to digital. I think money will go from conventional paper money to digital, and essentially
now we're bringing up Bitcoin.
Sorry. Well, that's the other extreme, but essentially movement of money will have to go digital. I mean, there's no way that it can carry on the way it is, given the size of just the Indian economy. So in terms of opportunity, huge opportunity. I mean, whichever way you look at it, there's no doubt in my mind that there's a big opportunity. Challenges essentially are not technology. Okay, it's more, at least from the narrow view, the way I look at it is as there is an opportunity, there are large groups or vested interests from key players who want to obviously monopolize or at least capitalize on this opportunity. So you've got mobile network operators who are saying, fair enough, we're the guys who are going to be actually be able to most effectively move money from point A to point B. And the best way to do it is the mobile phone. You have, for the first time, mobile operating system manufacturers saying, we want to do this, right? So you have Google and Apple wanting to sort of, muscle into this turf. And then you have, banks who want to protect their turf, saying, I mean, this is something that we want to do. And of course, you have traditional hardware manufacturers, whether it's the mobile phone manufacturers, etc., who also want a piece of the action. The problem, I think, is that the opportunity exists. However, there are no standards currently, or no one really is agreeing on certain standards whereby, quick quick way to actually bring all of these technologies on a single common platform that can really be rolled out quickly and adopted by consumers without having to struggle with many different things. I think that is the key challenge that the payments industry faces today. The regulator, I think, is not an issue. I mean, the regulator in India especially, thankfully, is pretty forward-thinking, and as long as there is value in whatever a particular technology or system brings, they're most willing to do it.
Now, I'm not going to spend time on opportunity and all that. So on the challenge front, we keep hearing patience and time to execute. It's interesting. One person sitting in the panel here, they've acquired 65 million customers in 5 years that they've been in business. That's Fino. I mean, that's more than the population of many countries in the world. So, and I keep seeing, I see it in M-Swipe, in the kind of acceptability in the market. And like I said, so we've consistently seen that for the right product, at the right price, with the right distribution, there is a market. There is a market. And I do not for a moment buy into this argument that execution is a challenge. Execution is a challenge when people look at it. For example, at M-Swipe, we were very clear from day one, we're not a technology company, we are a merchant acquisition company. So then you completely change your focus, and then you say, okay, I've seen Fino move from what was originally a technology provider to microfinance institutions, a software company, to acquiring 65 million customers in 5 years. So this notion that it requires patience, I just think is an excuse. The second is about the regulator. A lot of people keep saying, the regulator is asking only one question. It says, what is the liability for a fraudulent transaction? If someone loses money, they come crying to me, not to you. If you can provide me a clear answer to that, then I'm okay. The classic example is M-Pesa. All the telecom companies said, we want to be involved in banking, mobile banking. So the regulator said, sure, there's a banking license requirement. You go apply for that. And as long as you meet those you comply with that, and you take responsibility for fraudulent transactions and liabilities, fine, you can be a bank. Just because 600 million people have a mobile phone doesn't mean you can automatically be a bank. So let's separate the two. And that's important in my view. So challenges exist because these are evolving landscapes, but it's also, I think, very important on how we approach and address the problem. And I think that's where the solution lies.
You wanted to add something, Rishi?
One challenge which I didn't cover the challenge part, I was more on the opportunities bit. But the challenge which comes in technology per se is to meet the expectation set. Somewhere it seems like the moment you talk about technology, people think that it's a magic wand, things will automatically turn rosy, everything will be in control, things will work. So one is the understanding bit, on the other side is a big challenge. Second is in terms of the expectation set which comes with that understanding. So as a company, we're grappling with the situation that people expect that with technology and services, and when the business is outsourced, a lot of things their worry is taken over. So this guy's 8-year-old company will be able to do what banking is not able to do in the last 50, 60 years. So technology is definitely there, but people have to understand on the other side that yes, there could be issues. You have to have a right set of expectations. I think that's something which we keep on facing day in and day out.
Great. So, I'm going to add a few things here that, I've actually seen the payments industry in the US at close quarters. I've seen PayPal from like 2001, and when it was a smaller company, and now I think as part of eBay, it probably forms a larger part of the market cap. eBay's market cap, I think, is in the vicinity of $70-80 billion. I think it's probably a $40-50 billion kind of part of the market cap. I've seen Square go from a seed round to I think last round was $4 billion. You don't really look at companies being created in the payment space, and there are at least 5 or 7 other examples like that. It's definitely one, if you look at financial services, it's definitely one of the larger spaces where there's a lot more innovation happening, and they're grabbing share from a pretty traditional industry which hasn't really been disrupted for the longest time. And the reason it hasn't been disrupted has always been security, controls, trust, credibility. But now what the electronic versions start doing is they provide that and much more, right? And they also provide to certain companies, like I would say scalability, non-linear growth where your kind of costs are remaining the same, but because it's electronic, etc., the growth kind of becomes much faster. And again, we're talking about large companies being created, within a 5 to 7 year time frame, which I would say historically would have taken 15, 20 years to create. So I think this is, this remains a very exciting area even for us at Norwest. And I mean, you can see the kind of panelists we have and the companies they've been built, whether it's taken 10 years, whether it's taken 3 years, the sizes are staggering. And some of them you can talk to them and ask them what their sizes are if they've not yet disclosed it, but they're staggering sized companies. So I actually think that if you kind of watch this space for the next 5 to 7 years, you probably see some pretty large market cap companies come out of this space. Now there are some structural problems in India where I think end users such as banks and some of the others need to understand that they still need to pay for these services, and they can't be kind of provided free or near free. But my personal belief is that this is a really exciting space to watch. And kind of on that note, I want to just thank the panel, and each of them has actually really contributed in a lot of ways in a certain specific subsegment of payments, and I want to thank them for their views and on this panel, and maybe open it up for a few questions. So I was given a few more minutes for questions. So
Hi, Shabir. While summarizing, you did talk about, the rapid innovation that's happening here, and that's what we're seeing in a lot of technology fields that are there. Given the disruptive capability that technology has, you've been talking about it in terms of it impacting traditional financial systems. What I'm saying is also with this rapid change in technology, Indian companies versus global players. How does that, and you were talking about eBay, you could talk about Google, you could talk about Foursquare, whole lot of things like that. And I'm saying that the three things or a few things which would keep Indian players relevant when, given that this is an infrastructure business which requires lots of investments against foreign competitors when they choose to address India, either you've locked in a large number of customers and switching costs are high, then you have them, or you've done some localization which allows others to not really come in and do it, or you're offering a cost. I'm taking the RuPay model and saying you've got a cost advantage, it's not worthwhile for them to service the market at that kind of a cost. Assuming that you're not able to build one of this, should investments be made in this space with the probability that there are big guys like a Google or an Amazon or an eBay who may come in and usurp a lot of the areas in payment and associated fields? Right now we are thinking of it in terms of payments.
So let me take a quick shot at that question. I think this applies to most disruptive areas, right? Whether it's e-commerce or, Amazon will come in and eBay has come in and some of the others. So I think the answer, it's a very good question. I think what you realize in payments is that in India, there is a lot of kind of this localization, as you call it, right? There is a lot of that. Certain models, like if you take a Fino model, I don't think it's there and elsewhere in the world, right? So I don't think that model exists in the US. It's not like there is a strategic there who's doing exactly the same thing and is going to come to India and do it. So I think there are two aspects. One is there is a lot of localization, I think, to acquire customers, right? I mean, in the US, we've done it for PayPal, and it's very neat and clean. There's a nice playbook. Ask Manish how difficult it is to acquire customers. It's not easy for a multinational to walk in, get their hands dirty, build a team, So I personally feel that sooner or later they will come in, but these will be great acquisition candidates for them rather than actually ending up saying I will build it from scratch. Secondly, like I said, there are lots of models in India because of financial inclusion, because of our unique banking systems, because of our unique regulator, where the model itself will have to be very different, right? Those guys don't have an NPCI, they don't have a Payments and Settlements Act, they don't have, so certain models are just not going to be exactly the same. Now, sure, certain areas there will be some direct competition, and certain guys will try and, if Google is able to establish NFC on every phone phone at no incremental cost because it's part of some Android chipset or whatever, yeah, maybe they'll be able to establish a dominant standard. So Android is one great area where you can argue that a global player has really influenced our lives in India, because most of the phones we're seeing right now are off Android. So you got to be careful about what I would say systemic plays which are going to kind of influence us. And if you're rebuilding an Android and putting a payment system in there, difficult. But on the other hand, if there's a high degree of touch and feel in India, localization, differentiated model, regulatory requirements, I think payments is reasonably insular that way because of all the regulation, and because can't do person-to-person payments. PayPal has tried to do that for the last 10 years in India. They can't get the normal PayPal license. Its stored value is difficult. There are lots of regulatory. So it's not going to be that easy. I actually think this is one area which should end up being pretty interesting. But, I don't know if anyone else wants to. I would kind of keep it if you have something different to say.
Kind of carry forward from what you are saying in terms of, if I look at in any payment system, there is a front end which has to be done, then there is a back end activities which have to be done. It's very easy to replicate or set up a new system for a back end activities. Could be core banking, could be some other initiatives. But the field piece is something like a PayPal or anybody else, like what we are doing on the field. Even in India, we have such huge challenge moving from north to south, moving from east to west. So somebody coming from outside, having that kind of experience, getting their hands dirty on the field, in India on the field is very difficult. But yes, something on the back end, it could be relatively easy. It's provided the regulator has to be. And looking at the dollar rupee, maybe the regulator would be keen. At least some more dollars will flow in.
Hopefully that's a short-term issue, although we crossed 64.5 today.
64.
It touched at least, that's what I heard from the guys. Sorry, you'll have to speak up, won't hear you.
I think opportunity is bigger than whatever we are thinking, we are discussing. In India, the economy, where the parallel economy is running actually. So there is a threat in the mind of people that once they will come on the digital payment and all, they will be caught actually. So there is, on the lighter side, I would like to discuss, is there any way of controlling or way of managing this thing in the digital payment actually?
This store value card is probably the best way of doing it. In terms of you put 1,000 rupees, 2,000 rupees and using it, or a top up like something which M-Pesa is doing in Kenya, is that they put the money there that can be used for top up, that can be used for buying tickets. So parallel economy which is there. So something in our business, the bottom of the pyramid and APL category people, they are actually not covered in that per se. But yes, there could be challenge, but then there are initiatives. I think the PayPal initiative, secure method as well as a limited amount can take care of it.
Cash is not going to disappear. Like Manish said, 97% happens in cash at the retail level, right? So it's not going to disappear. So I think some of these companies, like again one of our investee companies, so what they're doing is they're taking cash and converting it to electronic, right? Now again, I think the threat perception from a retail standpoint, a consumer standpoint, is not there because he's paying the retailer cash. He doesn't know what's happening at the back end. So as of now, at least there's no issue there that, I paid cash for my railway ticket. Well, the retailer, what he did is he had a prepaid limit with Suvidha, right? Electronically he entered the cash in, that limit got changed, the ticket got issued, that got cleared. There's a lot of technology happening at the back end which works seamlessly with the railway reservation system, right? And all that moves at the back end. So I think some of it is going to be very much like I think a lot of the panel said, consumer adoption wise, don't try and change too much about how they think, right? But at the back end, like let the systems, processes, electronics behind try and take care of all the risk management, the other issues, so that we are kind of moving and leapfrogging into the electronic age. But adoption wise, it always takes a little longer for people. Like, the guy who comes to Manish's, company, he's going to just say, I want to use a credit card. He's not going to say now, why is it on a phone or why is it on this? So that will also say, I accept a credit card. Then he might look at the thing and say, what is this, and learn something. But as far as he's concerned, he's using his credit card. So I think that is the way to kind of deal with, I don't know if I've answered your question, but...
No, really answered. But you see if the e-commerce growth in the country and all, this lot of people are there in the country who are not coming on the e-commerce, on online payments and all. Because of this reason, they don't want to come into the limelight.
It's cash on delivery. 60% of e-commerce in India is cash on delivery. I do a lot of e-commerce investing. It's not very efficient, but it's cash on delivery. And the way these guys are dealing with it is that a lot of people offer you discounts if you pay with your credit card. because cash on delivery has a higher, so they charge you extra. They charge you 100 rupees for COD, they charge you nothing if you pay with electronic or debit credit card or any of that. So I think, again, you'll find nothing is, consumer takes the longest time to change behavior, and it will be a slow and steady process in that direction.
This cash on delivery issue, I think, is more of a cultural issue. It's not that people don't want to pay by card. They would be, because at the end of the day, let's understand, the transaction is still electronic, right? You ordered the goods online. If a government agency, just theoretically speaking, wants to track where those goods were delivered, they can do that. It's more of a cultural thing that people want to get goods in hand and then pay for it. Just the notion that my bank account has got debited and then I have to wait for the goods to be delivered, culturally, I think we don't accept.
Mani, I'll disagree there, because there is, the credit card transactions need to be disclosed in your tax returns, which, and there is this false sense of security that if I pay cash, so I agree it's false, but in the consumer's head, he's cool, right? So I have a couple of cousins who are hardware traders who don't use their credit card. If you go to, Book My Show or whatever, he'll tell me, you go and book it, because I don't want to use the credit card, and I'm like, this is really lame, but fine, I'll do it, right? So it's, so that's the kind of, I think that's where it is coming. But I think it's a good question. Like, I think biggest challenge in payments today is going to be, as we start moving towards the next century, and you got a lot of younger guys coming in from the colleges who are willing to, like I used to be in a startup called Bazi.com. I put my credit card online in 1999. I've never had an issue, never had any fraud. Like, anytime someone says credit card, I just put it online, I don't think twice. There are lots of guys, and happens in the US. Lots of it today will just say credit card online, oh, no way, And that's got to change, and that's why you have prepaid cards coming in, where you'll have a little bit of 1,000 rupees of value, and then it'll come.
I think his question is valid. Even in the US, now after Snowden and all the spying, I wonder how many people are going to be as comfortable. So I think the larger question is absolutely valid, because now they come a full circle. Today, it's actually very scary if you think about it. The guy who has the maximum amount of data in the world is a 28-year-old guy named Mark Zuckerberg. Facebook. That's shocking. If you take iTunes, the amount of credit card information that they have, and see all the facts that are coming out after the Snowden issue. So it's a genuine issue. Even for the educated, it's not about...
His question was more on the IT bit, not in terms of the information security.
No, but the use of cash for security.
So I just have a question.
Sure.
I see this Aadhaar, I've just come from US, and I think India's gone really far ahead when it comes to having biometric information of every individual. They've already crossed, I think, 40 crore. And in the US also, they don't have that information of every individual. So I think that can really help in the payment system if they start incorporating, because they already have the data. They've taken biometric, fingerprinting, and if they can incorporate that kind of like, even on ATM transaction, just kind of put your fingerprinting, that's additional security, because almost everyone has the Aadhaar numbers now, like almost like 40 crore people already have it. So how, they are incorporating this Aadhaar, information in the banking payment systems? Just I was wondering.
So just in terms of how Aadhaar gets, Aadhaar is nothing but an ID. Aadhaar will only answer one question. Are you who you claim you are?
Right.
Yes or no? Aadhaar has no clue whether you are rich, poor, you have credit card, no credit card, bank account, no bank account, nothing. What also Aadhaar does is, but what this does is, it takes most of them past what's called the KYC, know your customer know. So there is what's called the Aadhaar Payment Bridge, APB. APBS, Aadhaar Payment Bridge System, is it?
Yeah.
Okay. So it's nothing but, think of it as an Excel file that says, and banks do it, each of the bank. Now if you're banking with HDFC, they probably asked you for your Aadhaar number already. Saying, this is your customer number, this is my account number, this is your Aadhaar number. So the idea is, now you can you then go away from traditional ATMs? Do you need a card at all? Why do you need a card? Why do you need to have an ATM card? What purpose does it serve? It only serves an ID purpose. So can you go put your biometric or do something and then, but the way this linkage is happening is what's called the Aadhaar Payment Bridge. I think it's today seeded with about 200 million Aadhaars and corresponding bank accounts. There's still some way to go. The plan is before the next elections to do 600 million.
Right.
So that can be given additional security because of biometric, because even the ATMs can ask for, like additional security, putting a Aadhaar finger, biometric. That can really make transactions secure by having Aadhaar information, a lot of payment systems.
That's the idea.
Right.
Let's hope it works.
That's where the debate is going actually between the banks and in terms of bank has their own system, so this is a one level more security which is there. So that's the debate which is going on. That's where Praveen said in terms of if there is a dispute, how do you resolve that?
See, the whole UID thing we did in Hot or Not is more about that. I mean, as a little more layman view, I would say that Aadhaar is a platform and all the apps are just being created. So the full potential of the platform will only be seen once you see those apps, whether it's a B2B app and the bank is using it more for KYC, or whether it's a B2C app and you're using your thumbprint to get into ATM with a triple secure way of doing it. But you're right, it's very innovative and unique, and the question is just more about not if but when, right? How much time it will take for some of these to kick in to start revolutionizing our world, right? I mean, your day-to-day business. So I do think it's a pretty, of the Hot or Not, probably the most hot thing. The question is, given that it's so big, government driven, they've done a phenomenal job, but eventually it becomes a social security fabric for India, right? And if you see the way it's used in the US, you pretty much can't do anything without it. So
I just want to sort of
sure, please.
I think Aadhaar has done a phenomenal job. I mean, I think it's a technology that will gain global momentum the moment, I don't know if all of you guys follow, but Apple is due to announce, if the rumor mills are correct, the next iPhone on the 10th of September, which is slated to have biometric recognition of the user, right? And I think it's going to take just one of these kind of companies to actually take biometrics or biometric authentication to the level where it will find mass consumer sort of acceptance and application. But I mean, all said and done, I think it's Aadhaar that has sort of pioneered this, for the first time, on the planet.
So in terms of biometric, all our transactions are biometrically done. So when we talk about safety and security at the customer end, so when we started 7 years back, when you look at the technology, we look at security as one of the basic ingredients of any technology and how the banks would do it. So all our transactions are biometrically secured. In fact, we have 650 million fingerprints in our system currently. So each 65 million account has 10 fingers, so 650 million fingerprints are there, which are actually stored on the smart card which is there. And each and every transaction is actually validated through a fingerprint verification. So that's how we do that 1,000 crores of disbursements or cash in and cash out every month.
Okay, we are 15 minutes beyond time. I would say that more than 100 people are still in the room. So genuinely, audience, thank you very much for staying and not leaving midway. And on the same point, I would say thank you to the panel, because obviously they've said stuff which is worth waiting for, hopefully. Well, I also like to take, since we are the last panel for the evening, chance to thank VC Circle. I sat through the whole day's proceedings, and as usual, it was very well kind of structured, managed. I think the quality and depth of the speakers across the panels was very strong. So, once again, Sahad and team, thank you very much. Thanks, Ben. Thanks, everyone. Okay, thank you.